So I am live now, and just hopefully you can hear me now. But I'm going to adjust this just so we look a little neater here. Unfortunately, we're just going over some pretty basic information. So let me just get set up here so that we have audio and we're in good shape. We're gonna figure this out. There is sound now. Okay, so we're gonna have to just modify this a little bit for today. And fortunately, it is just the basics. So we're gonna give you this upshot here. I'm so sorry about that. But today I've been messing around with a few different settings on my computer to try to get better better quality lives, and I think I broke it. So we're gonna have to manage with this for now. And I really don't like putting out things that are kind of low quality, so I'll try to make up for it in the information that's actually being delivered. So the idea for this was to have this in a format that I guess was more presentational in style. So I was going to be switching between a PowerPoint and my front-facing camera. And I actually wanted to do it on my DSLR, so I downloaded a bunch of different apps today, and I think that drove my computer nuts, which is why I don't have volume now. So we've already wasted, 24 minutes of the day trying to get to this. So first and foremost, I'm sorry about that. I hope those who are very interested stuck around or come back to watch this in a little bit. And we're going to kind of go over in a very general way what we're going to be covering for the next few weeks. Here on ANTP Life, we mostly talk about real estate, business, and everything else that I'm kind of involved in, and I try to focus mostly on how to make money and how to live the best version of your life as possible. The thing that we've always dreamed about since we were kids, who we would be if we had unlimited money or unlimited time. So I think stock trading falls into that as it is one of my revenue streams and something that you could do from just about anywhere in the world, and I think that's what makes it rather interesting. So this series, How to Trade Stocks, is going to be, I guess, the basis of what you're going to need to actually get started in trying to make money in this. Just to give you a little background on, I guess starting from the very, very basic point, I think we really need to talk about what is the stock market in itself and how did the stock market come to be. So as I understand it, there was a trading company that was trading with India. And this was kind of a big deal as kind of the importing of spices and goods from the East, became popularized in Europe. One of the companies decided that it would be a good idea if they would sell shares of their company to the public, because there was, I guess, a bit of a boom or a bit of a rush in the spice market. So that's kind of where the issuing of shares even came to be, and even selling shares to the public, right? So the general public was looking to buy shares of, this shipping company or this trade company, and from what I understand, that's where it started. So in modern times, the stock market is an open market where companies are able to sell stocks to the general public, okay? And the reason why they're selling stocks to the general public is because they're looking to raise money, just like that company that was trading in India was looking to raise money so that they could expand their businesses. Okay? The United States has the most robust stock market in the world. It is traded, by people throughout the world, just because it is the largest marketplace. Imagine it as the Amazon of company of company shares in a way. All right. So the U.S. stock market is exactly that. Now, people who are buying stocks are buying a fractional percentage of a company. Okay, and that stock's price is based entirely on the supply and demand of that stock. What do I mean by that? This is what actually blew my mind when I started trading, is that before I started trading, I was so naive in how the stock market worked that I thought that every publicly traded company had to have like their accounting system feeding the master server, so to speak, and that the ticker prices or the stock price was directly calculated from their current cash flow or their current profit and losses. So, that's how clueless I was. And it's not that way. So the price of a stock is entirely determined by what the market is willing to pay for it and based on the supply and demand for that particular stock. Obviously, companies that are cutting edge or are highly profitable have a higher demand for their stock. And there's going to be a correlation between how a stock is priced and how well a company is doing, typically. Okay? But when you're buying a stock as someone from the general public, once again, you're buying a piece of that company, and you are officially a partial owner, right, or a shareholder of that company. You're going to have voting rights. You're going to be privileged to, corporate information, as is reported to everybody on a public basis, and you're going to be entitled to profit sharing. Okay, and that's what you're buying. Now, most investors are buying stocks for two reasons. They're either looking for the profit share, or they're looking for appreciation or increased value in the stocks that they purchase. All right, and that's usually the way that they're going to make money in either case. Now, in many cases, a company being traded on the public market is the first opportunity for a startup or a company to kind of convert shares of their company into a cash amount outside of, like, I guess, the back channels of venture capital or private equity. For some companies, it's a really large or huge opportunity to kind of give the shareholders some real value and liquidity to the shares that they own. Okay. So far, does anybody have any questions about this supply and demand concept and how stocks are priced? I'm just going to give it about a minute or so, and then I'll move on to my next talking point. Okay, no questions. Perfect. Okay. So the next thing I wanted to cover is, why should people be investing in the stock market? And my experience in trading stocks started in 2009 after having a talk with my buddy. He was actually ranked one of the top traders I think maybe in 2007, 2008, top traders under 30 in the United States. And he was going over his numbers with me, and he was the one who taught me that he's the one who taught me that stocks are, the price is based on supply and demand, and there's a way for you to study and visualize that so that you're able to kind of predict when the demand is going to increase and also increase your stock price. And that's what he was taking advantage of as a trader. But what I also saw was that the stock market enables you to earn money from anywhere in the world that you have electricity and an internet connection. It allows you to get a better handle by learning how to trade. You get a better handle of just managing your retirement accounts. It allows you to invest in proven businesses. In most cases, stocks that are publicly traded have been well vetted by investment banks, by tons of other independent investors, by the top auditors in the country. And they're kind of putting the stamp that this is a legit business and the numbers they're reporting are accurate and real, okay? Every now and then you get an Enron, but that's not the norm. You could kind of count on that information to be accurate and factual. So rather than investing in your cousin's company, right, that has no track record, you can invest in industries and just about any industry that you want very quickly and kind of have already some sort of built-in due diligence if you want to think about it that way. Another thing that I really like about the stock market is that in general it outperforms the rate of inflation, right? So historically, inflation in the United States is 3 to 4%. And in the past 90 years, the stock market has performed at an average of 9% a year. So if you're just kind of trading in the general market, let's just say in the S&P 500 or something along those lines, you're talking about potentially having the exposure of 9% on average per year. So at least that way your money is growing at a pace that outpaces inflation. So now that we got like the history and the background out of the way, it's time to talk about some common strategies that are used in the stock market and kind of the most common approaches that I've seen and that I generally understand or use. These three common strategies are going to be taking advantage of supply and demand on a day trading basis. That's where I started. Day trading is really looking to enter into a stock position or buy a stock and exit within a short period of time, usually within the day. You're not holding for overnight exposure. You're looking to pile in as much money as possible into a particular stock because you're predicting a short-term change, whether it's going up or down, right? If you're buying that stock, it's commonly referred to as being long the stock. If you're actually selling that stock, hoping for it to go down in price, you would be considered short that stock. The next piece that I see other traders using, this is not one of the strategies that I use, is long-term investing for dividends or even dividends and appreciation, okay? I've never been a dividend trader. Most of the stocks that I hold, I'm in for a few days to max a few weeks. I rarely hold things for months, almost never. And I was groomed in day trading. So my mentality is get in, get out. Don't really care about too much about the underlying fundamentals. I'm focused entirely on price action and technical analysis. But there are other people out there who do invest in the long term, like they're truly investing in companies. Like, all right, I'm going to buy some of this Apple, and when Apple pays out the dividend, I'll receive my portion of my profits according to how many shares I own. So if I owned 5,000 shares and they paid out a $3 dividend, and at the end of that quarter, I'd make $15,000 just by owning the stock, regardless of whether or not the stock's price went up or down. And considering that the market is volatile, your 5,000 shares might be worth, less than that $15,000 dividend, and it's kind of hard to say how to really approach it. I personally don't approach it that way. Like I said, I'm stuck in the trader's mindset, where I don't like to be too exposed for too long. So, to me, it's just like, even though I'm receiving cash flow or a dividend from a stock investment or from a share that I own, I don't like to see that the current liquid price for that stock is now less than what I paid for it. And even with my dividends for the year, I'm still underwater. I don't like that idea. I don't like that feeling. So I stay away from longer term investments, and I stay away from the dividend trading. But there's people out there who that's what they do. Plenty of investors, plenty of funds. I think the majority of people who are investing in the stock market are long-term investors who are benefiting from dividends. Okay. The next common strategy is kind of in between the real long-term investors and the day traders, and that's called swing trading. And that's really more speculative, but there is one school of thought that I do really like, which takes a fundamental approach. And by fundamental approach, it means investing in a stock based on its underlying financials and how that company is doing in the overall market. And it merges it with the technical analysis where you're kind of studying supply and demand chains as well as institutional investors and what the smarter money is doing. So I use in my regular trading activities, like I said, my mind is conditioned as a day trader, but my strategy tends to lean towards the swing trading methodology, because I'm usually trying to identify the top performing stocks that have great underlying fundamentals, and that are demonstrating signs of, consumption or increased demand for the stock and institutional involvement. Okay, and I think one of the best ways to think about a trader is that a trader is like those fish that swim around sharks, and the shark is going around gobbling up, larger fish, and those little fish that are swimming along the sides of the shark are just eating the little crumbs that are left behind, the shark, and that's kind of what the role that most traders are playing. Okay, they're buying and selling to make spreads between what they paid for the stock and what they sold the stock for, and they're really just identifying what the bigger fish are doing. What are the top hedge funds doing? What are the top pension funds doing? What is Warren Buffett doing? And following that activity. And there's ways for you to identify and know whether or not there is institutional involvement in a stock, whether it's in the day or daily chart or 5-minute chart or whatever, because institutions are charged with deploying tons and tons of money. So it's hard for them to not be noticed when they're spending. Okay, I know there's dark pools, and we're not going to really go into all that, but for the most part, every transaction is recorded in the volume of the stock. All right, that's one of the things that you can track, is how much trading activity occurred today. And when you're tracking volume, you get to see that there was a big player who may have came in and bought a lot of stock, hence the price going up rapidly in a short period of time, or sold a lot of stock, meaning that they're no longer interested in being invested and the price goes down. So I look for the trends that show me that there's heavy institutional involvement, whether it's buying or selling, because those are clues that I'm looking for to ultimately finalize my decision as to whether or not I'm going to invest my money in a particular stock or not. Okay? Any questions on this point, on any of the common strategies? Okay, perfect. Moving on. So, perfect. Okay, so there's 3 questions. So, for the preferred trading platform, I do have my preferred trading platform, but since I'm a greedy bastard, What I, what I want you to do is email me at carl@soluslapierre.com. I usually have it in like my about section. Um, Email me there because I could give you like a referral link, and when you fund your account and you get started, um, you're gonna be able to, I'm gonna get a commission for that referral. Um, but it's one of the larger platforms, and the thing that I like about the platform that I use is that it's loaded full of tools. Great user interface, reputable company, really good for people who are going to be using technical analysis as part of their criteria for investing. So, Kaylina, just reach out to me via email, and I'll send you that invite. And I'm only allowed to invite 10 people a day. So, anybody who's interested in the platform, let me know, just so I could get you that, and at least I could recoup some money from them. It's not coming from you. You're not paying a fee or anything like that. But since I am promoting that platform, I will get a cut. So, and it's by email referral only. If not, I'll just slap a link down below with my referral, whatever, and you'll get it. But I want them to pay me, so I'll definitely connect you and get you on that platform. It's definitely my favorite. And the cool thing about this platform is that they give you like a demo account, right? So before you start investing real money, you could test your strategy and make sure that what you're doing makes sense, and then apply the same exact strategy with your real cash. And you're able to use the system, get used to putting in orders and all that. I hope that answers your question. Also, what are the minimum account dollar size amounts that are required for day trading? Okay, so if you're if you're gonna have a day trading account means that you're going to be opening and closing more than 3 positions in a given week, right? So that you're gonna buy and sell more than three stock symbols in a given week. That's what's considered pattern day trading. Now, to have a pattern day trading account as a retail account, okay, so you can either get a day trading account by being the general public, or you would have to register with a broker dealer and take one of the licensing exams. I'm no longer licensed. At one point it was a Series 7 would get you in, then it was, I think, the Series 60 something. I don't remember what ended up happening, and now there's a new one. So there are exams that you would take that would allow you to sign up with a firm, and then you would get way better margin. You'll get 50 to 1, right? So for every $1 that you had invested or parked up with the broker dealer, they would give you $50 for every $1. So if you got 1,000, you got $50,000 buying power. On a retail account, if you're going to be a pattern day trader, you're going to need a minimum of $25,000. But in reality, you should have a minimum of $30,000. And the reason for that is the minute that you go under, your cash amount being $25,000, they're going to start triggering calls for you to add more money to your account, or else they're going to take away your day trading privileges. Actually, they'll take away all your privileges until you bring your account back up to $25,000. So if you entered in one position and that was a losing position and lost $50, now you're out the game, which is stupid because there are gonna be tons of losers in your trading life. So starting with $30,000 for a pattern day trading account is the best way to go. And on a retail account, you'll get 4 to 1 margin. So on your $30,000, you'll get $120,000 worth of buying power. Okay, and when you're getting started as a day trader, I always recommend starting with 100 share size lots. And if you have $120,000 buying capacity or buying power, it's more than enough for you to make money, because 100 shares of $100 stock is only 10 grand, right? It's only when you get over 1,200 shares, $1,200 per share, will you not be able to take a 100 share position. And I wouldn't recommend somebody who's just getting started trade anything really over $200, especially as a day trader, because the movement might make you nauseous at, at that price point. Another thing with day trading that you should know, when I started, my objective was to make $1 per my max share size a day. Meaning, I started on 100 shares. My daily objective was to make $100. Okay? Some days I made 60, some days I made 200. That was a good day. Some days I, lost 50, some days I lost more. Okay? So, but the thing that you should be looking for is consistency in your performance and targeting a certain amount. So if you see that your strategy, instead of trying to make $1, let's just say your strategy earns you 60 cents on your share size a day consistently. You consistently can find a 60-cent trade. If you had 100 shares, you'd be making $60 a day. When you move up to 1,000 shares, because you're for the past 300 days, you could consistently average 60 cents. When you move up to 1,000, you're making $600 a day. Then 10,000, and you do the math. So that's really the objective when you're day trading, is to get consistent at fixed lot sizes so that you can expand your lot size and be just as sniper-like with your trading. However, I'll give you a major disclaimer. Day trading is the hardest thing that you could possibly do to earn money in this world. It is mentally taxing. It is not easy. Most people get wiped out. It is so hard. And it's so hard not because the theory is hard. It's so hard to master yourself, to master your emotions, to do the right thing even though you're losing money, and avoid doing the wrong thing even though it's making you money. It's the only, place that I know of that you could do the wrong thing and get rewarded with a profit. And because of that, it makes people kind of start breaking the rules because they're making money breaking the rules. And people always associate making money with doing the right thing. You're smart because you made money. You're witty because you made money. All these positive things or positive attributes are associated with making money. So when somebody does the wrong thing in the stock market, like hold a stock against them too much, and then it comes back and they make money, they start to think that they know what they're doing, that it's okay to hold it against you too far. And that's a recipe for getting wiped out. So got a low battery warning here. One second. Sorry guys, I'm sorry for the bootleg presentation, but I broke my computer, so. All right, I think there's okay. Do I trade options? Yes. So Kayleen's questions I answered. The last video posted 30 minutes ago and no audio. Yep, that is correct. It was a mess on my hands. I'm sorry about that. Nikki G, the platform is worldwide, and it is it's accessible worldwide. It's probably gonna have different screening criteria. Because they will ask for a social security number, but if you indicate that you're from a different country, I'm sure you could just hop on the phone with them and figure out exactly how you need to get set up. What country are you in, Nikki? Blind Sam, so 1%. I'm not sure what you mean by 1%. That if your goal is to make 1% on your money per day, that would be pretty dope, right? Because you'd have an awesome year if you made consistently 1% a day. It doesn't quite work that way, but if you were able to put up 1% a day, you would be heralded as one of the best to ever do it. Okay, so I've got my questions filtered here, and I hope that addressed them. So, yeah, so as far as pattern day trading, that's what you're gonna want, at least $30,000, or you're gonna have to take one of the licensing exams that have nothing to do with trading. It has everything to do with functioning as a broker dealer, but it's not gonna be, it's kind of like uh, real estate agent courses, right? They tell you how to, the rules of real estate, but it doesn't teach you how to make a good investment. So it's sort of like that. Um, okay, so what are we gonna cover next? All right, so the way that I'm breaking this up is because there's a lot of information, okay? So I'm breaking it up into 8 lessons or 8 groups. And each lesson is gonna cover one aspect of what you need to do to get started. And some of the questions already led to that. So the very next lesson that we're gonna have is setting up your account and the platform that we will be using. But since we have a week's time, just reach out to me via email, carl@soluslapierre.com, which is in my about section. Plus I'll put it in the description below, just so you guys have it handy, because it's a mouthful to spell. Or you could hit me at kpierre, like my K, like my first name, my full last name, Pierre, at entplife.com, and I'll kind of connect you with the broker and send you that referral. But so the very next lesson we're going to do is going to be a screen share, getting you familiar with the platform. Okay, I think it's important for us to go over that next, because you need to know what you're looking at, right? When you look at I know when you're getting started and you look at the screenshot that I shared of my account, it's pretty busy, right? Sometimes it looks like the Matrix, like what am I looking at right now? And I want to be able to show you how you should set up your platform, what certain things mean, how to navigate, how to enter your demo account, how to place an order, just the mechanics of the platform. I think that's important for you to know first. Then the next lesson is going to be understanding charts. Now, before we do that lesson, and right now, I'm going to give you one really good resource that I share with everybody, which is taught from one of the prominent stock trading teachers out there named Oliver Velez. Man, I've been following his stuff since I started trading. You know, the very first book that I bought on trading was one of his books. It was recommended, and it's highly recommended by most traders, which is Tools and Tactics for the Master Day Trader by Oliver Velez. So that book teaches you some of the fundamentals of really personal management, right? That's risk management and psychology of trading stocks. Absolutely something that's required. But he has this awesome presentation on YouTube. I saw it on VHS, where he talks about the candlesticks, the actual graph, the indicator of what has happened in price action for the day. And I think that is so critical, and has been critical for stock trading for maybe the past 75 years, is interpreting the tape, interpreting the data that's represented in the candlestick. So it's probably over an hour of information just on candlesticks. And since he teaches that so much better than I ever could, I highly recommend that this thing is not charging. Horrible day. That you watch that video. So I'm going to also include that link below in the description, so come back for that. But if you just searched Oliver Velez, let me look if I can find how he has it named. But Oliver Velez candlesticks, or Oliver Velez elephant bars might be how it's described. Let me just do a quick search here. Yeah, okay, it's called Oliver Velez Elephant Walk. all right? That's going to really show you, and if you just want to get some more information on trading, definitely check his stuff out. Really goes deep into the psychology of trading, which is probably the most important thing, more important than understanding how the market works. That part takes about 6 months to get a good handle on. And once you have a good handle on it, you ultimately need to work out your kinks as a person. Give me 1 second to just charge this in. Okay. So hopefully that's charging up now. So I would highly recommend that before moving even further. So because it's going to be about a week before I do the next tutorial. This one's just a generalization. Then after lesson 2 is going to be understanding the charts, right? Really looking at the charts, understanding how to set your indicators, a little deeper dive into the platform. Then we're going to start talking about stock patterns. Now, stock patterns are, I guess, graphical demonstrations of the fluctuations of supply and demand, okay? And there's certain stock patterns that repeat over and over again with a certain level of accuracy regularly, okay? And if you can identify these stock patterns, then you can essentially trade them. Yeah. So you could essentially trade these stock patterns over and over and over again. And there's going to be some that you can identify so well and will become your favorites in a way. And there's models for predicting what will happen next, how much of a move you should get from a certain stock pattern or a certain consolidation pattern. So we'll go into stock patterns and how to interpret them. And then the next piece is taking it a little bit further, which is that mix of the technical analysis, which is purely what's on the chart, and then the fundamental analysis, which is going into the CAN-SLIM method. I might have one of my trading buddies come on for that episode because he's more proficient in the CAN-SLIM methodology than I am. But the CAN-SLIM methodology was developed by a gentleman by the name of William O'Neill. He's one of the contributors, or if not the owner, of Investors Business Daily. Investors Business Daily is a publication like the Wall Street Journal, except it's better. And they have a methodology for approaching how to invest in stocks. They outperform the S&P 500 all the time. So that methodology is something that I follow, especially when I'm trying to narrow down the list of stocks that I'm investing in, okay? And it's perfect for people who are doing swing trading, day trading even, because there's certain breakout periods or certain breakout days that you would take advantage of as a day trader. And for those of you who are looking for long-term appreciation and long-term growth, the CAN-SLIM methodology and the IBD methodology is something I'm going to cover and go into in great detail. Then I'm going to talk about options and ETFs and kind of like the index funds. So one person asked, do I trade options? And if you don't know, a lot of times you hear about stocks and options. In short, what an option, the answer is yes, I do trade options. But what an option is really almost like an insurance policy in a way on an underlying stock. So it's technically a contract to buy or sell a stock at a given price. So you may, let's just say that I wanted to buy the option for, I don't know, PFSI, I don't know, whatever, AMT, whatever the stock symbol is, right? The contract would, and you're just buying it like you're buying anything else, like anything else on the internet. You click to buy this option, and you're saying that you're willing to buy an option to purchase a stock at a given price before a period in time in the future. So how would I put this best to make it understandable? When you're buying an option, you're paying a premium, like almost like a little deposit, like just kind of like buying a house, right? You're putting some money down in contract. right? To have the rights to buy that asset. And your right to buy that asset expires at some point in the future. It could be a month, it could be a week, it could be a year, whatever it is. And you're going to pay this premium up front. If you exercise that option, you will then buy the stock at the price in the contract. So imagine today a stock is trading at $200, but the stock pattern looks like it should trade to $260 in the next month or so, right? You're not sure, but you want to buy this contract. The contract price it's trading at $200, and you want to buy the option to buy it at $200, okay? You might pay $5 for that option that expires in August of this year, okay? So $5 per contract. Each contract is 100 shares. So you would be paying like $500 for that contract. Now, if that stock goes from $200 to $250 from now till then, guess what? You still have the rights to buy that stock at the $200 price. But the cool thing about options is that same $500 for 100 shares, right? For the 100 share option, when it gets closer to the expiration date and that stock is trading at $260, the logical thing is that your option is going to be worth the difference between your contract price, the underlying $200 option that you have to buy it at that $200 price, and $260. So for a $500 investment, you might see an outrageous return of $50 a share, right? So you might see $50 on 100, that's $5,000 on a $500 investment because you just bought the contract. And you could sell the contract because somebody may be interested in buying the contract, for the total of $257. They're still up in that regards by $3 a share. It's still a good buy for them if they pay $247 for it. So, options, they're a little tricky to understand because it's not as simple as buy it and sell it. But the thing is, when you buy and invest in options, you can only lose your contract price. So if you don't exercise the contract and you don't sell the contract, what's going to happen? You're going to lose the deposit that you put down, okay? The benefit is that you know already what your maximum exposure is. So even if it goes against you and expires or whatever, you knew that $500 is all that you could lose. And people also use options to protect their positions. For example, it's earnings season now. So during earnings season, the prices of stocks will be extremely volatile overnight. For example, a company was expected to earn $1 per share, but due to COVID-19, they only earned 25 cents per share. Chances are that stock price is going to get hammered the next day. So if I own it at $200 a share, and it's trading today at $230, but I'm holding it through earnings because I believe in the company, I might buy an option to sell it at 200 or 210, so that even if the stock gets hammered and opens tomorrow at 175, I still have the option to sell it at my contracted price of 200, 210, 215, whatever it is, okay? So the thing that makes options kind of sexy is that you can control the stock asset in a way for very little money. And you also have the maximum exposure. So, some people will just trade options, and some people make a killing just trading options. So it's really your option to trade options or not. And you could use them in so many different strategies. When I'm trading options, I don't do anything complicated. I don't do any kind of spreads or anything like that. I'll trade options just to stretch my dollars a little further, right? So let's just say I was looking to buy a $400 stock, Netflix, for instance, and I don't want to tie up too much of my cash and too much of my buying power. I may just buy the option on Netflix. Usually it's like a fraction of what the stock price is. So I'm only tying up that much money, and I know what my exposure is, and I still benefit from the price action of it going up if I'm buying calls. So that's the short on options. ETFs are a completely different product. Also kind of hard to explain, but essentially they are like micro funds. Like you buy a share of, it's almost like buying the S&P 500. So like ETFs exist to buy, like they design a portfolio and they buy at certain percentages. Like it could be an energy portfolio. So they might have Exxon Mobil in there, they might have First Solar in there, and it's gonna be 10% Exxon, 10% BP, 5% solar, another percent wind, whatever. And they're managing this pool of investments, and you could buy a share of that, if that makes any sense. So sometimes people like to invest in ETFs because somebody else has designed what they believe to be a good mix of stocks representing some sort of underlying asset, whether it's the S&P 500, energy, automobiles, whatever. There's an ETF for everything, these days at least. So I'll go into that in detail so you can understand the terminology, understand the products that exist out there that are traded in the stock market, but not necessarily stocks, okay? Then we're gonna start getting into paper trading, all right? So after you have this underlying knowledge, we're going to start trading fake money, all right? So the platform that I use gives you a pretty decent amount of money as far as buying power is concerned, and you get to simulate trades real time, okay? And in this simulation, you get to really know what it feels like. And if you take it seriously, it feels close to real, but it's a whole lot different, parking $50,000 in a stock than it is $50,000 of fake money, all right? So most of the time when you transition from paper trading to real money, your heart beats a little bit differently, all right? Your attachment is different. But if you can be successful paper trading and be just as confident with your paper money as your real money, then what you've been doing on paper should translate to real money, okay? So that's the reason that we get into paper trading, but it's really to get the mechanics down and to establish what your strategy is gonna be. Because we're gonna be discussing multiple strategies, multiple entry points. You could try day trading, you could try swing trading, you could see what's right for you with fake money before you put your real dollars to work, okay? And naturally, right after starting your paper trading, we're gonna be doing more and more, coverage into risk management, okay? Risk management is by far the most important piece of investing in the stock market. If you do not have good risk management in place and a good risk management strategy, stocks, life, business, whatever it is, if you don't have it, you are gonna get crushed at one point or another. You need to know what your risk is even before you put on a trade. When I'm looking at it, so my routine is I'm searching through 500 stocks a day. I'm looking at them, maybe more, probably like 600 stocks a day I look at. And I'm looking for stock patterns. I'm looking for signs of, institutional investment. I'm comparing it to my IBD list. I'm doing a lot to decide what I'm going to invest in. When the scenario that I'm looking for occurs, the very first thing that I do is I measure what is my risk in this trade. And for me, I do not risk more than 5% on a particular trade, and I do not expose more than 25% of my portfolio on a particular symbol, okay? What that does is that even if that 25% of my portfolio is invested and loses 5%, I've only lost about 2% or less than 2% of my entire portfolio. So I'm not overly exposed. But that's the first thing I calculate. From this entry point to the technical exit of this trade, what is the risk here? And that's going to decide, that's going to determine how much I buy. That's going to determine whether I think it's a good buy at that price, if I need to wait longer, if I'm waiting for a pullback so it could fall within my 5% max loss. And I tend to target 10% or more on the upside. So my risk to reward, even if I'm 50% accurate with determining what to buy, if I'm targeting 10% and I'm losing 5%, and there's the vacuum, and I'm losing 5%, then the only thing that, I'll be net up 5% over time, okay? So that's kind of, how I manage my risk, but we're gonna go into different risk management models and how to calculate the risk and what you should be doing to protect yourself, okay? You need to have a rock solid risk management plan in place before you start putting real money into the market, right? Unless you're a cowboy and you don't mind losing money. And the final thing that I'm gonna cover in the last lesson is that we're gonna cover what my strategy is and the training group that I belong to, which is me, that guy who taught me how to trade, my other buddy. I have a CFA in that group. There's a good mix of educated investors in there. And there's also some newbies in there who are benefiting from the stock calls that we make. It's free. It's just a group of people who are actively trading, all right? So I'm gonna go over my strategy so that if you like my strategy may not be the one for you, but if you like my strategy and you like my approach and you enter the group, then you'll understand what I'm looking at. You'll understand why. You might be able to identify other stocks that are not on my list that are setting up in the same way and present that to the group. That way we're all sharing our knowledge, we're all centralizing it in one place, and we're taking advantage of that. Today, I think I'm up $4,000 for the day. Yesterday, I think I was only up $1,300. Monday was kind of rough, so I think I was down. I took a 12K swing yesterday, and those sort of things happen. But it was 12K unrealized, right? So I was probably down like 4,000 for the day. Now, the thing is, on a week like this week, if everything kind of shapes up, I'll be up maybe anywhere between $4,000 and $7,000 for the week. Last week it looked a lot similar. The week before, a lot similar. Okay, so that's the potential there. Vacuum is on. That is the last slide. And what I'm going to do, actually, I'm going to go into my office just so we can talk a little bit. And I don't have this vacuum noise. So give me 1 second. We'll walk there. I guess that's the benefit of being on this. So I do want to open up for a few questions. Sorry, yeah, they're vacuuming out now. So I do want to open up for a few questions so far on what we've discussed. I know we've only discussed about the general makeup of the market and what to expect and so on. But I'm sure you guys may have some questions that you want to ask, and I'm here for the next, I would say, 10 minutes or so. Let me see. I'm gonna just sit back here, it's quiet. Yeah. So I'm here for the next 10 minutes, and then we can go over that, or until my battery dies, since it is dying. Sorry, big thumb. Here we go. Okay, the Kaylina, what is the methodology called? Can, like a soda can, and slim, like a skinny guy or a girl. Slim. Can, slim, and it's an acronym for what to look for, or the qualities of a stock that you're interested in. Kaylina, what are the risks of options? Main risk with an option is that your option expires, and that's it, and you lose your money for not acting on the option. So if you spent $2,000 to buy your contracts and you never executed the contract to actually buy the shares or even sell your contract to somebody else, your money's gone. So you have to make a decision at some point to either sell your contracts or execute your contract and buy the underlying shares. Okay, the they're not. I can't say that they're necessarily more risky, but they're more volatile because you're once again you're trading the premium. So at first, the, until you execute your contract, the premium is fluctuating, aggressively, right? It's fluctuating against time, and it's fluctuating against price action in the market. So, within 3 days, you might lose 50% in your premium because the stock price has gone down, $10. Even though the stock has moved $10 and it's only a 3% move, you may have a 50% reduction in the value of that option. So you need to use your options wisely. The way that I use them is either to protect my position, and I say, you know what, it's better for me to pay for this option today to know that I'm safe, so that if this stock gets crushed into earnings, and I have a large position going into earnings, I'd rather, you know, have the protection, so I'll pay for that protection, or I would say, you know what, I I see that this is going to move higher. Market is a little choppy, like it's been these past 3 days. It's been, you know, overlapping bars. Um, I may say, hey, you know what? Let me position myself in this option. I'm only at risk for 2 grand. That would have been my max loss on this position anyway, and let me not tie up, my buying power, right? So I might purchase an option, and that's it. So you just have to use your risk accordingly. How can I trade from Singapore? Um, in the U.S. market, I would say, sign up with a U.S. brokerage. Email me at either kpierre@entplife.com or carl@soloslapierre.com, which is in my About Me section, and I'll try to connect you with the platform that I use, and you can see if it works. Okay, so I have about 325, 326.40. I have about $640,000 buying power, and that's based on around. So I have about a 600,000 to 650,000, $650,000 buying power, based on 160K uh, cash uh, amount. So I'm usually anywhere from 50% to 100% allocated. So 300,000 exposure at a time. And that was from Mr. Shikasta. Yeah. So yeah, I would say it's about, because I think I have like 155 in my account, and I have 4-to-1 intraday and 2-to-1 overnight. So, and that's your typical terms. You're gonna have your day trading 4-to-1 margin is gonna be during the day, and your margin overnight, because obviously the broker just doesn't want to get crushed. If you get crushed, they'll limit you to 2-to-1, right? So when I'm fully allocated overnight, the most that I'll have allocated is about 300,000. Um, and during the day, I might take I might take and hold a position into the next day, even though I'll have a regulation T call. But if it makes sense for me to open that position because the price is good and I'm fully in on my 2-to-1, I'll take that trade. Any other questions? I think depending on where you are in the world, um, I think depending on where you are in the world makes a difference. For instance, if I was in most of the South American countries, and I was trading a $5,000 account, making $60 a day on that $5,000 account, day trading, let's just say. That would be a pretty decent living in Colombia, in Brazil, in Argentina, and Venezuela, you know, in most of the South American countries. So I would say you don't really need that much, but the more money you have, like everything, the more money you can make. Um, Regulation T. I don't know what the hell it means, honestly. It just means that you don't have the underlying cash reserves to support that. So let's just say, like I said, I got 150K in my account cash. During the day, I have 4-to-1 margin. So if I'm fully invested with 600,000, right, at 4-to-1, as the market is coming to a close, I'll get a notification, Regulation T margin call, meaning that I will lose my day trading privileges until I add another $150,000 in my account, because I can only be margined up overnight 2-to-1. So they're giving me 4 times my money during the day, but overnight they're only giving me two. But I'm currently owning $600,000 of shares. So if I only have $150,000 as my underlying cash, what's going to happen? I'm going to need to add another 150, or else they're going to freeze. They're not going to freeze me from selling my shares, but they're going to freeze me from putting on any new positions. So that's what happens in a Reg T call or in a margin call. Sandra's asking, what is the least you could start investing with? I don't. I think the least. It depends again on what country you're in. Because as an international person, you don't have to take the same licensing exams to get that outrageous margin. So like Oliver Velez, he has a firm, and if you take it, it's designed as a course though. But if you take his courses and he puts you on a demo account and you perform well in the demo account, the money from your course funds your brokerage account, and I think he starts you out with 50K buying power. So if you put up $1,000, the same $1,000 that was your education money is the same $1,000 that's going to be margined up 50-to-1. And then even with that little $1,000, you'll have $50,000 buying power. Okay, but so I would say that's probably the least. In the U.S., I would say you start out with at least 2,000. Because at least with 2,000, you could at least invest it, get your feet wet, understand the market, feel what it's like to see the fluctuations, get familiar with the platform, that sort of thing. But even if you did, the best firms are doing 8, 9, 10, 11% a year. So even if you did 15%, because you're trading with a different strategy than big firms are, because they're gonna have to function differently because of the size that they're moving. But let's just say you were doing 15% a year on $2,000. That's only $300. It's better than what your savings account would give you, but you're also exposed to risk of loss and that sort of thing. So I don't know. I think the minimum that people should start with is $30,000 if you're in the United States. That way you get a pattern day trading account. That way you can do more transactions, because the more transactions you do, the wiser you become, right? Each transaction is going to teach you something. If you're journaling, which you absolutely should be journaling, you should be evaluating your trades every day. Why did I take this trade? Why did I enter it? Why did I exit it? Did I follow my rules? And what should I do to modify in the next trade? So if you have a pattern day trading account and you're actively getting in and out of positions, you're going to be learning much, much faster than, okay, I bought $2,000 worth of Zoom, for instance, and I held it. I mean, there's nothing to learn there. Is this a positive expected value for the average person? I don't know what that question means. I don't. Could you just try to rephrase it for me so I could try to answer it? Um, but in all, let me tell you something. People are always interested in the stock market because it's where the smart money is. It's where their retirement accounts are. Um, you always hear news stories of people making a killing. Um, for me, I only put, you know, like 10% of my money into the market at a given time, 20%. If things are moving. Um, so I like it. I actually love trading. So for me, I look to, I kind of get play money from the market in a way. Um, I get money to do things that I like. Like I'm buying a boat with my buddy uh, next week, just to host on Airbnb and to host boat parties because people can't go to clubs, so they're having fun on their boat. So proceeds that I've made from trading, I'm pushing into that boat, which I wouldn't necessarily do from my cash in a way. I probably would do it because it's a money maker. It's supposed to make money, so I would spend my money on something like a boat because the entire intent is to generate revenue. Plus, I'll get a pretty, I get a deduction on that as well. So that's what I do with. That's why I trade is to kind of whip up money that I would like, or when I'm traveling, I'll trade as well, because it's like most of the time my friends are zonked out from partying the night before, so I might trade the morning session, you know, whip up a few $100 to a few $1,000 in the day. Vacations paid for right there, kind of thing. So don't confuse it with every day being a winner. You know, most people are gonna promote their successes. I do take losses. Sometimes it's very frustrating. Sometimes it's for breaking my own rules. Um, you know, I'm not one of those guys who has like claims a 90% accuracy rate. No, my accuracy rate is about 50%. What's helps me is my risk management more than anything. Some months I might hit 70% accuracy, but that might be a month where the market is just generally strong and kind of raising all stocks, so it's not real. Biggest loss and gain in a single day, man. Biggest. So I could talk about that from day trading and swing trading in a maybe a little bit differently. So biggest loss in a single day trading was $10,000, um, and that came after having like a $8,000 day. So positive as far as day trading is concerned, and that happens to a lot of traders. Um, they get overconfident, and usually within a few days of their best day ever, they get crushed. So that happened to me. And on a swing trading basis, which is different because I could have $300,000 exposed. The market pulls in 3%. I'm down, $9,000 on that day. Or I could even have a wilder swing where I might be up on the day, I don't know, 6, 7,000, and then the day ends -8, right? So I haven't lost more than like 15,000 at a given time, just because I always have my protections in place, and not it's it's very rare that every position that I'm in is a loser, but that's on a day basis. So I might have a, and I'll share like those things here too. Um, you'll see that my opening, like I might have on Monday